Ladies and gentlemen, welcome to Wealth Down with me, your host Noble PM. Today we're going to do a couple of stock reviews for Brookfield Corporation, HIMS and HERS, and Google. So three stocks that we are watching for. Maybe there's a buying opportunity here. So let's start with Brookfield. So Brookfield Corporation, this is not Brookfield Asset Management. They do own a big portion of Brookfield Asset Management. So actually Brookfield Asset Management is owned by Brookfield Corporation. Now they're an investment company. What they do best, and that is to buy companies, to invest in them, to take a big chunk of share in them, and then to send the management team and do their magic and make a lot of money. So they're a investment company. Now, over the past years, Brookfield had a couple of very good years. They are year-to-date up 43.29%. They also have a small dividend of 0.53% here. But if we take a look at their PE ratio, you just want to cry because it's 104. Actually, the price to earning the EPS, 0.50. The quick calculation here, it's 56.76 divided by 0.58, and there we go. Oh, okay. So we're currently with the new, because they just reported yesterday earnings, so they are at 97. But still, it is above the average, which is 25. So let's just subtract 25 from here. So it was 97. 97 minus 25, and let's divide it now by 25, and they're 288% above a average market PE. Also, the forecast for the returns for the next year would be 8.73%. But if you take a look at their earnings report, they actually are forecasting a pretty good average return of over 20% in the next 5 years. So each and every year, 20% return, which is above market average. Also, their forecast for earnings, as you can see here, is estimated to grow. So EPS and also revenue. If you take a look at the technicals, the Brookfield Corporation is currently oversold, and on the MACD, they're trying to trigger a sell signal. They will trigger a sell signal. Now, if you're already bought into Brookfield, right here at the top, if there is a little pop, you could consider taking some profits or just rebalancing some risk. So let's do a risk assessment for Brookfield Corporation. So RSI is currently at 58, which we would consider a medium to high risk, but let's go with a high risk. A MACD sell to be triggered, which means that getting in at this price could be dangerous. So we're also going to leave this at high risk. A PE ratio of 97, which is above 25 with above 25 average. We have 288%. So that's a lot. But this is a very high risk for this current stock right now. But they do project to come in with above market average. Although this forecast right here does say that this is the next year, this is actually taking into consideration that Brookfield is currently overbought. And even in an overbought position, you could beat market average return. This is above 8. So year to year return, 8.7, which is above 8. So we're going to consider this a medium risk. So if you would consider this as a long-term investment, this would look something different. But for a short-term investment, which Brookfield actually is not a trade, not a company that I would trade on a regular basis, for a long-term, I would still wait for a better price. So I would just consider this as a medium risk. But if a better opportunity arises, that would be the opportunity to buy a bit of Brookfield for your portfolio. Okay, next up, let's do a bit of analysis for Alphabet, and this is the Class A shares. We also have the Class C shares. It almost doesn't matter. Now, Alphabet is pretty much beaten up. On a year-to-year basis is up 23.72%. So it really had a bit of boost in the last couple of months. But comparing it to, let's say, Microsoft and Apple, which had far greater growth this year, Alphabet is actually lagging. Why? Where they're behind on the AI business. Now, on the forecast, from its current position, Alphabet is to return an average of 22.30%. That is pretty much above market expectations. So also the shares, the estimated EPS is to grow. Now, if we take a look at their overall financials, and also Alphabet does return a 0.46% dividend yield, and with a price to earnings, a PE ratio of 23.73, actually Alphabet does not look that bad. Also, if you take a look at their technicals, Alphabet is currently, well, they did trigger a sell signal. So this is going to be interesting. If this sell signal is confirmed, that maybe there is a much better opportunity to get into Alphabet if you're looking to get into it. So also an RSI of 50, which is a medium risk for me, is looking pretty good at the moment. So let's do a risk calculation for Alphabet. We have a RSI of 50, which is, let's say, a medium risk. We have a MACD sell signal triggered. Now, this still needs to be confirmed, so I'm going to leave it as medium risk. We have a PE that is 23.29, which is less than 25 market average. So we're going to, there is not much that much lower. So we're going to just add it as a medium risk. And I'm not going to evaluate anything else, not even long-term, short-term or something like that. This wouldn't be a trade. Alphabet is one of those stocks that is a long-term hold. So I would only add another medium risk to it. And this wouldn't influence then the all-around risk meter still would end up at 50. So I'm going to leave it as it is. And we're going to say that Alphabet is currently a medium risk investment. So let's go to the third one. First stock is HIMS and HERS, which is, well, a healthcare company. HIMS and HERS is, I don't know how to call it. Is it a meme stock? Because if you take a look at the last 5 years, we're going to see here a pretty interesting return, let's just say. We have a 23 peak, $23 a share that is, in June, July, but we're coming from from December, $8 a share. Then we went from 23 down to 13, which is a lot. Then we went up to 23, and we're down now to 19.52. So as you can see, this could be a very risky and volatile investment. The last time it peaked, it was in 2021. And it has a huge downslope into the 2022s, 2023s, came back a bit in 2023, and then went down again, and now is an extreme speculative stock for me. Take a look at their financials. Their current price to earnings is at 42.23, which is above the current market valuation. Also, their yield no dividends. So if you would hold them for a long time and the stock would stay down, regardless of recession or not, you're not going to get anything to hold in that stock. Now, the technicals or the forecast actually is on the downside minus 7%, but the upside is 64%, and they're averaging somewhere 79%. Now, these are projected analysts. We don't know who these analysts are. 13 analysts say it's a buy. Let's just be cautioned here. But this would be for me, for example, a trade position. So let's go a couple of steps and analyze the risk here. Let's see, we have a RSI of 44. So let's say that this is, I can't say it's a medium risk. I'm going to leave it as a not a low risk, but as a medium risk right now. The MACD is triggered and it's selling off. So MACD selling. So let's just say that the risk rate started to sell. It could go lower. So we're going to go with a bit lower risk. This confirmed that it's selling. We said that they have a PE of 48, I believe it was. And this would be, let's just do a quick calculation of 48 minus 25 and then divided by 25. We're going to have a times 100, 92%. So 24 is above 25 AVG with 92%. So let's categorize this as a high risk, or I would say a very high risk. Now, these are pure technicals. As a long-term investment, I have no idea because it is it's a pharmaceutical company, healthcare, beauty care. They could be rocked by L'Oreal and stuff like that anytime, or some kind of artist comes or some kind of TikTok hero comes out and provides a better or promotes a better product. They're off, they're gone, and most of their investments are actually in marketing. So long term, this is a very, very high risk. Actually, very, very, very high. Now, I'm going to stop here with the analysis on HIMS and HERS. So if you want to treat this as a trading position, then be my guest. But more than that, I wouldn't recommend. Okay, everyone, hope you enjoyed this analysis. If you did, give this video a thumbs up. Also, subscribe to the channel. Click that notification bell in order to get notified when we post new videos like this. We post from Mondays to Fridays. And don't forget, on the weekends, which is tomorrow, we're going to do a portfolio review. What we bought, what we sold, and why we did it. So definitely check that out. See you tomorrow, guys and girls. Take care. Have a lovely day. Bye-bye.